Good morning to you. Today is Monday. Welcome to Business First. The show is Business Monday Review, and we're here to give you all the analysis and commentary for our business headlines that featured in our newspapers last week. Today's show has been brought to you by CBZ Bank, who are our partners for success. And just so you know, you can now receive Western Union from your loved one and family from diaspora across all our 60 branches, our CBZ 60 branches in Zimbabwe. This morning I am joined by a resident analyst. His name is Victor Bhoroma, and he is an economic analyst. Victor, thank you so much for coming yet again for Business Monday Review.
Thank you so much, Nyasha. Good day to our viewers and listeners.
Okay, Victor, this morning we're going to be discussing a couple of headlines, as we always do, and I'm going to pick up the first one that was reported. It's in the Standard on the 16th of June, and the headline was "Bleak Future for Tobacco Farming." It seems that what the government and the tobacco farmers agreed on in terms of the ratio for retention has not worked in the favor for the tobacco farmers. What is taking place within that sector?
Certainly, tobacco farmers are not happy with a lot of things. And like you highlighted, one of those major things is the retention issue. So the RBZ highlighted that they were going to retain 50% of their foreign currency earnings. But obviously, farmers are not happy with the 50%. They wanted 80 or 100%. So that's the first major bone of contention. Then secondly, there's also the average selling price on the auction floors, where on average they are selling $65 per kg against an average of $2.50 to $3 last season. So that has been another issue. Then third, there's also the clearing charges that TIMB levies on all farmers, which takes about $8 to $9 per barrel. So that affects, obviously, or that eats into their profit margins. And when you look at it, if from a production point of view, as long as the producer is not happy with the price, they will sit on the product. So what we have seen is that there has been a decline in the value of tobacco delivered. I think 44% down from last year. This year, in the past 2 months, we have only traded 253 million against 530 million in US dollars same time last year. So that has got an impact. So that would need to be resolved. And the fear is that if it continues, farmers are not going to take input loans going into next season. What it effectively means is come next season, selling season, they won't have an obligation to supply to their usual buyers. So that means they will channel the product to the parallel market, which is very dangerous.
I wanted to, you mentioned, I think one of the second points you raised was the price of the leaf itself. Is this not an issue of quality? I mean, we have experienced a drought, and perhaps the actual quality of the leaf is not at the standard to be able to fetch the high prices. Is that the reason?
It's also the quality is not that good, but when you average, what you get is there are those obviously from A2 commercial farmers that have got very good quality. They are also complaining about the prices. Then there are those who have got the lower grade. But when you average out, obviously you would need to get a good price so that you have an incentive to be able to continue producing. But generally, the farmer organizations have not been happy about the price, regardless of the quality that they are delivering on the auction system.
Has that got anything to do with the world markets? I mean, I'm trying to understand what could be driving these low prices.
Not really. What actually farmers are saying is that the sort of interference by the regulator to ensure that the price is as low as possible. I do not think that it has got anything to do with the world market prices. They fear that there is interference.
Okay. All right. And that was our first headline, which will lead us into the second one. And this one was reported in Newsday. And the headline read that there's positive response to Interbank Forex markets. Okay, is this something that we can anticipate to continue to see in terms of the interbank performance starting to get better? I think last week we talked about Delta, and you raised the point in that conversation where you said it'll be interesting to see if the allocation is across board.
Yeah, across the board, yes,
Yes.
true. You see, the Interbank market is very key to the local industry. Why? Because that's where they get most of their foreign currency in order to import raw materials.
Yeah.
So as long as there is no liquidity on the Interbank market, it also means that they won't be able to get their raw materials on time. And in terms of cost, it means the cost will also increase. They will need to fetch foreign currency on the black market. So it's very key. But what we have seen so far, about 155 million has been traded on the Interbank market from mid-February. And of that particular figure, 16% or close to about 25 million has been traded by individuals, corporates, NGOs, and embassies voluntarily. So it effectively means that there is a clear shortage of confidence on the market.
Yeah.
Those who have got foreign currency are holding on to the foreign currency. They are not selling it on the market for fear that when they want it, they won't be able to get it.
Yeah.
At the same time, they are anticipating prices to go up. So that means it's a catch-22. And when you look at the Reserve Bank, they do not have sufficient foreign currency in order to oil the Interbank market as well.
Yeah. Is there anything in the pipeline that is addressing this confidence issue? I mean, when you do talk to industry, you get the sense that there's a level of engagement that needs to happen between the private sector and the Reserve Bank to sort of stimulate that trust and confidence.
Yeah, obviously, I think the RBZ is very worried about the low volumes on the Interbank market because they drive inflation. You need a solid Interbank market. But authoritatively, talk about something being done. There hasn't been any communication. But I understand the CZI has been engaging Reserve Bank for some independence to the Interbank exchange. They wanted an independent body to supervise and oversee the Interbank market. So obviously that to them is very important. And obviously the RBZ is trying by all means to secure lines of credit so they can be able to pour on the Interbank market.
Yeah.
So those probably interventions might help, but we are still in a hole.
And so the 500 million US dollar facility that the Minister of Finance announced a few weeks now, is that still being dispersed onto the interbank market, you think?
There has not been much clarity there for the sole reason that what we expected was a situation where when you've got a 500 million facility, you would expect updates. So far we have released 45, we have released 50, we have released 100, so that we can be able to monitor progress. But when you look at the RBZ or Treasury position there, they are obviously afraid of that particular 500 million going into the wrong hands. There has been obviously reports of favoritism, there's been reports of corruption, where that particular forex can be diverted to personal use. So they have got concerns that the 500 million might not reach the intended beneficiaries. So that's the reason why probably they have not been releasing it to the tune that we would expect or the industry would expect.
Do you think our economy currently is hinging on the success of that interbank market?
The success of the Interbank market is one of the things that we definitely would need in order to ensure that prices are stable. But there are also other issues that you have got to look at. For example, you also want production to be able to improve. You are also looking at improvements in foreign direct investments. Then there is also a general need for consistency when it comes to policy, from a monetary policy point of view to the fiscal policy point of view. So those are some of the things that can be able to improve investment or general confidence levels in the local economy.
All right. So and with that, we'll take a quick break. We will be back. Today is Biz Monday Review. After this break, please do stay tuned.
I need money. So I'm turning my home into cash. And just like that, I can take my kids to school, do home improvements, or even invest in my business. Maybe you have some unexpected medical bills, or you want to buy a new home. You can get a loan based on the value of your property. Don't sit on money. Get a home equity loan from CBZ today.
Welcome welcome back to Business First. The show today is Biz Monday Review, and I am joined on this interview by our resident analyst. His name is Victor Bhoroma. Just to remind you, our show has been brought to you this morning by CBZ Bank, who are our partners for success. You can receive hard currency from our CBZ branches. And just to let you know, our trading hours are 8 o'clock until 3 o'clock during weekdays, and we're open from 8 until 11:30 on weekends. You can receive Western Union from your loved ones and family who are sending from diaspora, and you can pick that money in hard currency across our 60 branches in Zimbabwe. All right, Victor, when we went to the break, you had started mentioning one of the stimulants we need for our economy, and you highlighted FDI as one of them. There is a headline that we had in Herald on the 18th of June, which was titled, FDI jumps to 745 million. Help us understand, when we read this, is the 745 million that is already in the country?
When you say FDI, it might not be in the country, but these are sort of confirmed commitments in terms of investments into the country. Some of them obviously will be realized over time, but they are confirmed commitments. And when you look at that particular story, I think that's a positive. That's about a 113% jump from what we realized last year. And previously we had an all-time high of 545 million in 2014.
Yeah.
So when you go up to 745, that's quite a lot. But when you look at our investment of foreign direct investment inquiries, they are mainly biased towards mining, where we have got diamond, platinum, driving most of the foreign direct investment. So obviously you would want to look at a situation where we can be able to diversify and balance. Then also we are still punching below our weight. When you look at certain countries, South Africa at 5.3 billion, Angola 7 billion, Mozambique about 2.5 billion, Zambia 2.3 billion. So we are still punching below our weight. There's still a lot to be done in terms of improving the ease of doing business, economic reforms. You're also looking at guarantees for property rights that are very key for foreign investors.
Yeah.
Once we improve on that, we can also be able to be on par with our regional peers.
And I guess the highlight really was the amendment of the Indigenization Act.
Definitely.
Yes, how has that unlocked our investment drive?
Yeah, when you look at the amendments that have been done so far, it means that foreign investors can now be able to invest 100% in a local asset, say for platinum and diamond, where they need to partner locals. So it more or less sort of frees up the investment. So that has been a positive in the right direction. There is talk, obviously, that the indigenization policy may be scrapped totally, but so far it has been positive, as you can see on the figures.
All right, okay. And talking about the interest, as you highlighted earlier, being in the mining sector, our next headline talks into that. And this was reported in Daily News on the 19th of June. And the headline was that there is Prospect Resources funds a Zim lithium project. Prospect Resources is an Australian-based lithium developer. Is this a good investment? I think they've put in close to 3.5 million that they've raised on the Australian Stock Exchange. Can we expect more players coming on in this capacity?
Yeah, we actually expect more, for the sole reason that Zimbabwe is home to 2% of non-reserves of lithium in the world. Then secondly, when you look at the growth in electric cars, electric cars are very important because they use the lithium that is used in electric batteries.
Yeah.
Is what we produce. So we can expect more players to come in. Last year alone, Prospect raised about 25 million for the Arcadia project, which was actually declared a national project. So if we have got the same stance, we can actually expect more players to come in, and that will be very good. But obviously our mantra there should be local beneficiation of the commodity, so that we can be able to fetch higher prices of 15,000 per ton against the 400 per ton that we fetch when we sell raw lithium.
400 versus 15,000.
15,000, yes. When you sell lithium chloride and yes, definitely.
Okay. Any plans on the table for that beneficiation?
Not something which is solid, but I understand obviously the industry, the Ministry of Mines is also looking at reforming the the tax regime. So obviously once you reform and award national project status, which suspends duty, excess duty and VAT on all importation of equipment, it will be good. Not yet sure if they are really targeting specific players. Remember, Bikita Minerals has been there for a long time. So they obviously will be looking at getting incentives as well.
Yeah. All right. And the Newsday on the 20th of June had a headline that bill softens up foreign investors. And this is obviously in reference to the Zimbabwe Investment Development Bill. Yeah. Can you talk us through that bill and just highlight to us any developments that this bill is likely to bring onto the market?
Okay, so when you look at the Zimbabwe Investment and Development Agency Bill, it has got the good and the bad. I'll start with the good. The good is that it brings in the aspect of one-stop shop, where you have got Zimra, NASA, EMA, Zera, all housed under one roof. So what it effectively means is that it shortens the timelines for compliance when you are opening a new company. So for foreign investors, that would be good. That will improve the ease of doing business. Then on the bad side, what the bill proposes now is that foreign nationals can now be able to employ any number of foreign expatriates to work locally, which is not good for the local labor market, simply because obviously that's coming from pressure from the Far East, where they would want to bring in as much of their nationals to work in Zimbabwe. But when you look at our unemployment levels, which is actually more than 90%, we would want a situation where 85% of those employed on any project are Zimbabweans, so that we can be able to improve on employment.
Yeah, I mean, it certainly would put more pressure on that labor market for locals. Are we likely to see it pass in that state, or is it likely that there might be tweaking for that labor clause?
I do not see any tweaking for now, for the sole reason that we are sort of slightly desperate to get foreign direct investment. I think it will pass in its form. It may be amended later on, but I think the means justifies to an end, where the government is saying, for now, let's concentrate on getting the foreign direct investment. Once it's there, we can actually go onto the negotiating table.
All right. And our last headline for this morning is one that was reported in Business Weekly, and the headline reads that CZI wants a free forex market. I think you touched on it earlier in the show. How would it work? The Interbank Market is already struggling to secure willing buyers and willing sellers. Wouldn't another market just be competition that the Interbank Market would not necessarily need at this stage?
It's actually not struggling to get willing buyers. Willing buyers are there.
Okay, it's the sellers.
Yes, it's the sellers that is the problem. Because when you look at demand for foreign currency on the Interbank Market, it's close to 1 billion. But only 155 million has been traded. And like we highlighted earlier, only 16% of that 155 million has been voluntary. So there is a problem in terms of willing sellers. But then when you look at what they are proposing, what they didn't actually come out clearly is that they suspect that the central bank is actually manipulating and interfering with the rate.
Okay.
They would want a situation where the interbank rate and the black market rate sort of converge. And once they converge, it means that more forex will be directed towards the interbank market. So that's what they are clamoring. When you look at the black market rate at the moment, it's about 11.5. And the interbank rate is about 6.28. So there is a vast difference there. So they want a situation where an independent body manages the trading, so that at least there is sort of a very small variance, what is being traded on the interbank market and what is being traded on the black market. But obviously from an RBZ point of view, they will not be sort of willing to let that happen, for the sole reason that it will increase inflation levels. It will also increase the rate of, it will also increase the cost of servicing local debt when it comes to savings bonds, treasury bills that RBZ has to service. It will also lead to a situation where there could be labor demands to increase salaries on the part of treasury. So they are not really willing to let it go. So we'll see how it goes, but they are demanding independence there.
Are there no benefits to transparency on that market? Ideally, it's taking what's happening on the parallel markets and putting some checks and balances
Yes.
to be able to have the transparency to see how the market forces are really working to determine rates. Couldn't it be a win-win for everybody in the end?
Yeah, transparency would be good, but there is a problem that we are sitting on a lot of treasury bills. We are also sitting on a situation where the government is trying to control inflation levels, because inflation levels also is a cost to the government when it comes to labor. So transparency is very good, but the catch-22 comes from a situation where we have got a lot of debt, local debt. So they are trying to manage inflation and also the cost of debt. So that's why they are not really letting it go. But there will be cost for transparency. Foreign currency deliveries on the Interbank exchange would improve. But they are still in a catch-22 on that.
All right, we'll have to wait and see if CZI does actually succeed with that. And that's all the time that we had this morning for Biz Monday Review. Thank you, Victor, again for coming and helping us through these headlines.
Thank you.
All right, just to let you know, the show was brought to you by CBZ Bank, and CBZ now houses Western Union. So you can send money through CBZ Bank, Western Union, and it is available across all the branches, which is the 60 branches of CBZ Bank across the country. And that's all the time this morning. Thank you so much for watching and joining us. We will be back next week, Monday, for more Biz Review. So do make a date with us then. Until tomorrow, when I'm back for some more Business First, it's goodbye and God bless.